Good morning. It is Wednesday, February 25th, 2026. Today, the landscape of AI hardware sees a massive shift as Meta diversifies its supply chain, shaking up the chip market. Meanwhile, security researchers flag a sharp rise in AI automated cyber attacks, and new agentic tools promise to modernize global banking systems. I'm your host, and this is the DX Today AI Daily Brief.
Meta Platforms has signaled a significant pivot in its infrastructure strategy, agreeing to purchase billions of dollars in AI chips and data center gear from AMD. The deal targets a massive 6-gigawatt capacity expansion, specifically focusing on inference workloads, the actual running of AI models rather than just training them. This agreement grants Meta warrants to purchase up to 160 million shares of AMD, effectively aligning the financial interests of both companies. It represents one of the largest efforts yet by a hyperscaler to diversify its hardware supply chain, reducing reliance on a single dominant vendor while scaling up operations to support the next generation of AI services.
Wall Street responded immediately to the 6-gigawatt capacity agreement, sending AMD shares surging nearly 9% in recent trading. The double-digit billion-dollar deal is seen as a crucial validation of AMD's latest AI hardware lineup, proving it can meet the rigorous demands of top-tier technology firms. Analysts suggest that by securing a customer of Meta's scale, AMD has successfully positioned itself as the primary alternative in the AI accelerator market. The deal's structure, which includes performance-based incentives, suggests that massive deployment of these chips is imminent, providing the company with both the capital and the credibility needed to close the gap with market leaders.
This new partnership between Meta and AMD introduces unprecedented pressure on NVIDIA's long-standing dominance in the AI semiconductor space. While NVIDIA remains the gold standard for model training, the sheer scale of Meta's investment in AMD for inference workloads suggests a fracturing of the market. Hyperscalers are increasingly seeking cost efficiencies and supply redundancy for the operational phase of AI. Industry observers note that while NVIDIA retains a technological edge in many areas, the era of monopoly-like pricing power may be eroding as major tech companies actively fund and deploy viable alternatives to democratize the cost of compute.
The definition of enterprise AI is expanding beyond chatbots with Anthropic's release of new agentic tools for its Claude model. These updates allow the AI to integrate directly with banking and HR systems, moving from passive text generation to active workflow execution. Notably, the release includes capabilities to modernize legacy COBOL code on IBM systems, a critical infrastructure layer for the global financial sector. By positioning Claude as a co-worker capable of executing tasks rather than just analyzing data, the move intensifies the race toward functional autonomy in the workplace, promising to automate complex back-end processes that have resisted modernization for decades.
Goldman Sachs is weighing in on these software advancements, with analysts closely tracking Anthropic's expansion into agentic workflows. The firm's analysis suggests that the ability to integrate deep into enterprise stacks, handling tasks like payroll or code refactoring, is the key differentiator for valuation in 2026. This coverage indicates that institutional investors are moving past the novelty of generative text and are now focused on utility and integration. As these models begin with corporate data and infrastructure, the financial sector sees this as a maturing of the technology, from experimental to essential capital expenditure.
A new report from IBM's X-Force paints a concerning picture of the security landscape. The 2026 Threat Index reveals a 44% increase in attacks exploiting public-facing applications, largely driven by AI's ability to rapidly discover vulnerabilities. Automation is also aiding ransomware groups, with nearly half of observed organizations seeing AI used to accelerate malicious activity. Furthermore, InfoStealer malware has compromised over 300,000 credentials for AI services like ChatGPT in the last year alone. The data highlights a critical lag in defense, where basic security hygiene has not kept pace with the weaponization of machine learning tools by bad actors.
Amazon is facing high-profile turnover within its research division as the head of its AI lab has abruptly departed. The executive plans to launch an independent venture, signaling a continued trend of top talent leaving established tech giants to pursue the agility of the startup ecosystem. This exit comes at a sensitive time as Amazon continues to push for breakthroughs in artificial general intelligence. Industry watchers warn that the intense talent wars for specialized researchers could fragment expertise, slowing down incumbents while seeding a new generation of nimble competitors challenging the status quo.
The appetite for alternative compute architectures shows no signs of slowing, as Samba Nova Systems has secured a fresh round of capital. Backed by Intel, the company is positioning its systems as a specialized alternative to general-purpose GPUs. The CEO emphasized that this funding will support the deployment of full-stack AI solutions, catering to enterprises that need more than just raw silicon. This raise underscores a broader market belief that the future of AI hardware will be heterogeneous, with room for specialized players alongside the giants as global compute demand continues to outstrip supply.
Profound, a startup focused on applying AI to scientific discovery, has reached unicorn status just 18 months after its founding. The company raised $96 million at a $1 billion valuation, reflecting a surge of investor interest in science AI. Unlike consumer-facing chatbots, Profound targets the research and development sector, aiming to accelerate breakthroughs in chemistry and physics. This funding round suggests that venture capital is increasingly pivoting towards companies that apply generative models to hard science, where the potential for tangible, high-value intellectual property is significantly higher than in consumer applications.
Researchers at MIT have unveiled a new AI method capable of analyzing cell biology holistically, rather than in isolated segments. By processing comprehensive data on cellular structures and behaviors, the system helps scientists identify underlying mechanisms of disease that were previously invisible to human analysis. This development exemplifies the growing convergence of biology and computation, often called bio-AI. The implications for precision medicine are substantial, offering a pathway to design interventions based on a complete system view of the cell, potentially accelerating drug discovery timelines and improving efficacy.
The massive power requirements of AI data centers are colliding with geopolitical realities. The CEO of energy technology company Baker Hughes warned today that rising tensions globally could threaten the energy infrastructure required to sustain the AI boom. With companies planning gigawatt-scale factories, the stability of power grids and fuel supply chains has become a critical bottleneck. The commentary highlights that digital growth is now inextricably linked to physical energy security, and that any disruption in global energy markets could act as a hard brake on the expansion of artificial intelligence capabilities.
A note of caution comes from the Chicago Federal Reserve, where President Austin Goolsbee has drawn parallels between the current AI investment frenzy and the economic conditions preceding the 2008 financial crisis. Citing reports on worker displacement and market overheating, Goolsbee expressed concern that speculative spending is outpacing actual productivity gains. The warning serves as a signal that central bankers are closely monitoring the sector for systemic risks. As billions pour into infrastructure and chips, monetary policymakers are debating whether this is a sustainable productivity revolution or an asset bubble that requires regulatory cooling.
That wraps up our report on the shifting dynamics of artificial intelligence, from silicon supply chains to cybersecurity frontlines. For DX Today, stay curious.